Welcome back to Fast Market here on the Schwab Network. It's time for our cash tag segment. For that, let's bring in Landon Swan. He's a co-founder at Likefolio. Welcome back to the show, Landon.
Thanks. It's great to be here.
All right. So SBUX. Hey, Landon, it still is or near my favorite coffee. That has not changed. The stock price has been lagging the overall market for the last year or so. I mean, is this slowdown in China was a thorn in the side the last couple quarters? We haven't seen a rebound there. Labor issues, but I mean, I can't imagine this being one of the top brands in the world that we're starting to see sentiment data fall on this. Is this all about inflationary pressures?
So, what we're seeing is, well, first of all, let's talk about the stock. I mean, this thing was trading at like 91, had a great report, gapped up to 100, ran up to 107 or so.
Yeah.
And then, traditional stock market action, it filled the gap, and now we're basically back a couple of points above last report 3 months ago. So all that great report got flushed away. And I'm sure investors are a little bit frustrated there. But as you mentioned, there's a lot of good reasons for why that happened. Last quarter, they did talk about same-store sales being up about 8%, 3% being from increased traffic, and the rest being from increased prices price per ticket. So the opposite was kind of true in China. Actually, they had increased traffic of about 8%, but lower average ticket. So I think that's a little bit of concern. Investors are worried that maybe there's saturation in the U.S. and China. How many more stores can there be before you start looking at that PE ratio and say, is this still a growth type company, or are we getting there already? So I think that's a lot of the concern. Now, this quarter that's about to be reported is seasonally the strongest based on those holiday drinks. Those are very popular. We've always seen mentions go up around the different holiday drinks that they have. And I can tell you that Tivana brand is doing really well. It's getting a lot of consumer buzz as well. But when we look overall at SBUX, one of the things that we're seeing is that the traffic, the mentioned data, everything is supportive of a slightly higher price than where we're at, frankly. I think that we're a little bit oversold here just based on the U.S. consumer. Again, we don't have a ton of insight into China, but based on the U.S. consumer, we would say that things are looking pretty strong right now. If you look at the web visits right now, I think it's plus 5% on a year-over-year basis. Consumer happiness here, we've got the chart, is it's a little bit lower than some of the peers, and a lot of this has to do with the prices. I mean, they've been aggressively raising prices, and I think that people are a little frustrated with it, but they're also still buying, right? So, they're showing some frustration, but they're also still buying. I mean, we're talking about mentions being up 2% on a year-over-year basis, web visits up 5% on a year-over-year basis. Happiness has actually ticked up slightly, but over the longer term, it is down because of those price movements, the ticket prices. So generally speaking, I mean, we like this company at Likefolio. Short term, I think it's a little bit undervalued. We see moderate strength in the consumer, and you can see here that people, web visits for the company were very strong in this quarter. You can see that holiday pop where people are wanting to learn about the drinks, order them on the web and the app, and so that season being slightly stronger than last season, I think, is going to be a plus for investors when they hear from this company. And just overall, again, like I said, the mentions are up slightly as well. So generally speaking, decent data coming from Likefolio on this company, and the price has been, it's pulled back significantly from that last reaction. So I would say that expectations are probably a little muted. And I think that since they're lower, they'll probably meet or slightly exceed those expectations.
Landon, does this company need a good old-fashioned year of efficiency like Meta did? Because, a lot of their problems, they're getting good price action now from their commodities, right? Coffee beans have come down, 35, 40% off their peaks. So that's good news. But still, the operating costs of each store is high. Labor, the unionization of their labor is kind of a sticky problem, and freight and cups and all the bills does this company just need to go through and just get all their overall expenses lower? Because the peaks you guys have on your data are really interesting near the the end of the year each year around Christmas. I wonder if that's gift cards that makes that happen, because that's really interesting data how it spikes like that.
Yeah, I think some of it's gift cards. A lot of it has to do with those holiday drinks. They've always got the spice this and holiday that. I don't get them, but you guys probably know what I'm talking about. It's basically a milkshake, but they dress it up as a coffee in some way.
Yeah,
it's incredible, but
milkshake.
They're able to charge a lot of money for these, and it's just a way to renew interest in the brand. And so we see that every holiday. It's not. It's a dramatic shift, and because it's a little bit exaggerated when people talk about or do things online, because their hype gets exaggerated, because every day they're going to get the coffee. They're not talking about that, but they are talking about when they go for that special event. So that's what's interesting. It's not nearly as important as gym memberships in January, for example, that sort of seasonality. But there is some seasonality to it, so we do expect some good things out of this company. But you can see here, just mentions people talking about Starbucks. Going there, buying, getting it delivered, ordering it, all of that. And there's a significant gap here between the blue line, the top blue line, which is the 90-day moving average of the number of people talking about Starbucks, versus the stock price. And these aren't supposed to move exactly in line, but when they do start to get farther and farther apart, it's just kind of a little flag goes up at Likefolio and says, hey, you know what, this may be a bit of an opportunity. So, if this stock is trading at 110 or 115, we're staying away from it. It's priced right, or maybe a little overvalued. But in the low 90s, 93, 94, I think it's worth taking a shot on in this earnings report. It's not a super strong signal from us, but it's in the range of probably undervalued, and we think that they're going to deliver decent enough news to satisfy the low expectations that investors have.
Yeah, and looking at that mentions count versus the stock price, Landon, we're actually wider. That gap's actually wider than previous earnings in early November, where it did, over the next few days, shot up to 107. Then we had 12 straight days of downside moves in Starbucks, even though the market had turned around and was going higher. Is that the same setup that you're seeing here? Is, hey, you filled that gap back down to where we were last earnings, and our data hasn't changed, and that gap has actually widened, so maybe there is upside.
Yeah, I think so. I think that really speaks to investors' expectations. I think, like I said, I really think that there's a fear of saturation with the U.S. and China. And they're talking about adding to the U.S. footprint by plus 4% next year, the Chinese footprint by plus 13% next year, for a total global increase of plus 7%. So, they feel that there's still room to grow, but I know that that's a concern for investors. And so expectations are fairly low, and investors are just wondering, can you keep adding stores and still have people go? Can you keep adding price increases and still have people coming in the door? So far, the Likefolio data says yes, you can still do that. I don't know when that ends, but right now it looks like they're still able to achieve that. Now, if they do that and they start getting into some of the stuff that Kevin talked about, the increases in efficiency, even if they haven't done it but they start talking about it, that could be another big opportunity for investors, because I think that a lot of investors are starving for that as well. They want to see the cost side come down. Obviously, we have no insight into that side of things, but if that was talked about on the earnings call, that's going to be taken very well by investors.
Yep. Margins are supposed to increase this quarter, maybe from comparables from last year over year. All right, great stuff, great data as always, Landon.
Thanks, guys. Take care.
All right, that's Landon Swan, co-founder at Likefolio, breaking down the data. Kevin, last earnings was